I would like to welcome you all to the 9th edition of Finweek in Bratislava, Finweek 2025. It's a pleasure to be here again. We have a great speaker list today, and we will start with an opening speech by Monika Langiewicz, Minister Counsel of the Polish Embassy here in Bratislava. Welcome.
Good morning. I have the honor to welcome all of you to the Finweek 2025 conference on behalf of the Embassy and the organizers. I don't need to convince anyone gathered here that this event we are opening now is very important. Since the introduction of the first payments, cards and ATMs machines in mid-century, Fintech has been transforming constantly our everyday lives. The internet and the widespread use of smartphones have fueled the development of online financial services. The sector has capitalized also on the opportunities created by the financial crisis triggered by the collapse of Lehman Brothers and the COVID pandemic. Today, the fintech revolution is transforming the financial sector, introducing innovations not only in banking, but also in insurance and investing. Your creativity and consistent action have paved the way for the development of non-bank entities strongly linked to technology. Leveraging the latest technological advancements, Fintech offers financial services that are faster, cheaper, and more accessible to everyone. This provides both individual customers and businesses with new options for managing their finances. This, in turn, contributes to greater competitiveness and innovations in the market as a whole. Please allow me to present only some numbers. The fintech sector in Europe is growing rapidly, estimated at 315 billion euros in 2022, with a forecast to grow to over 1 trillion by 2032. Traditional European banks and new fintech players are leading together to a diverse and dynamic financial ecosystem. Other data shows that only in Central and Eastern Europe, the sector alone is worth 2.2 billion euros, from which Poland accounted for an impressive more than 800 million euros. This is good information that allows us to look to the future with optimism. But as you know, and some have experienced firsthand, these adopted successes are also accompanied by challenges, market fragmentations, regulatory problems, and difficulties with obtaining capital for investments. Therefore, is it crucial that fintech representatives have the opportunity to engage in expert debate, exchange of experience, and establish partnerships with entities from their own country as well as from abroad. By uniting forces and sharing knowledge, the fintech industry in Central Europe has the opportunity to build a solid competitive position and become a key player in the market. We have gathered here to talk not only about the success stories and challenges that faces the fintech industry, but also to jointly search for solutions that would help Central Europe become one of the leaders in the development of this sector. I wish you successful discussions and meeting with the industry partners. I hope the conference will meet all your expectations and will become a significant contribution to the debate on the future of the fintech Europe and in Europe and globally. Thank you for your attention.
Slovakia, the country with wine so delicious that you can't help but toast every single moment. Villages so open and welcoming that you feel right at home. And autumn days so picturesque that every walk becomes a work of art. Slovakia.
With that introduction of Slovakia, it feels even better to stand here today. Slovakia is a beautiful country, got a young, dynamic, well-educated workforce, English-speaking. So for this reason, the idea of a fintech valley in the V4 countries with lots of activities here in Slovakia makes very good sense. And it's really an honor to be here at the Fintech Conference 2025. It's an honor to moderate with such great speakers. I know some of you from before. There are some new speakers. And before we begin, I would like to thank our main partners, the Ministry of Finance of the Slovak Republic, the National Bank of Slovakia, and Visa. A big thank you to our big sponsors. Without partners, it would be very difficult to organize such big events like this. And also special thanks to our conference partners, Slovakia Travel, Embassy of Poland in Bratislava, CRIF, Slovak Credit Bureau, DECTA, Golden Gate, Blick, DevOps Group, Fumbi, Bratislava Stock Exchange, TPA Slovensko, Prosper and Pavlovic, University of Economics in Bratislava, and Matej Bell University in Banska Bystrica. We also would like to thank our AI stream partners, TechMates, and our official networking partner, IDEA. And a big thank you to all our supporters and media partners. Today's program is packed with groundbreaking discussions from Digital Euro CBDC to the first ever, to a presentation of Central Europe's joint Fintech strategy and sandbox initiative, Fintech Valley Europe. Let's dive in. I would like to welcome our first speakers for the first panel up to the stage. That would be Dušan Jurčák, Aniko Sombati, Asen Najedov, and online Jonas Gross, Peter Paulus, and Juraj Karpiš. It is great to have you here. It's an honor to have such a fantastic panel. The first panel is focused on policymakers. We want to focus on sovereignty and stability issues, regulatory challenges, as well as instant payments. And we have our speakers, Asen Najedov. Yep. And we have Aniko Sombati. Jonas Gross, you're there online. Great to have you on board.
Thanks so much.
And we have Peter Paulus. Great to see you. Juraj Karpiš. Perfect. Each panelist will have 2 to 3 minutes maximum to introduce themselves and their main topics, main issues in this area that you would like to discuss here on the panel. We make it very simple. We start in this end.
Well, thank you. I introduce myself very shortly. My name is Dušan Jurčák, as you can see. I am an executive director for the area of payment systems and cash management. That means that I have the physical cash in charge, as well the non-physical means of payments. That's perhaps some Janus position to look forward and to look behind. But I hope that after several years I make this job. I a little bit understand some important topics. I have to say I am the third time here in this Finweek presentation. The first time I was not so convinced. I was newcomer to the project of Digital Euro. I asked, as most of people at their times, what it is worth about. And I tried to say that I found the reason. I am convinced myself, and today I hope I will be as an optimist of this project.
Thank you very much. We continue with Peter Paulus online, because he's next in line. Annika will go third. We do Peter Paulus online here as a second one to introduce himself.
Hi Jonas, and good morning to everyone. And it's a really pleasure to be part of this panel. I am the head of financial unit, the permanent representation of Slovakia in the EU, and cover all European affairs areas in relation to the Ministry of Finance, which includes also financial services and Fintech area. But I am also dealing with economic affairs, customs, taxation, and economic fiscal coordination.
Thank you very much. And please, Aniko, can you introduce yourself and give us some...
So good morning, everyone. I'm Aniko Szombati. I'm an ex-central banker from Central Bank of Hungary. And in the last 6 years, I was leading the digitalization area at my bank and also leading the project which led to the single retail CBDC pilot in Europe that was up until now made, and we have been, of course, covering the Digital Euro very closely, and we made several publications on how to design a CBDC framework and how to implement. So later on, I would like to add to the discussion based on real field experience. Thank you.
Perfect. Jonas Gross, you're next.
Yes, thank you very much. So I hope you can understand me loud and clearly.
We hear you very well.
Perfect, perfect. Good morning to Bratislava. So my name is Jonas Gross. I'm chairman of the Digital Euro Association, which is an independent think tank based out of Europe, so not affiliated with central banks or also not the Digital Euro. Obviously, we are an organization that does a lot of education in this regard. We are there for 6 to 7 years. We are involved in the in the political process, if you will. Also, of course, support and represent our members, and are also, of course, looking very, very closely to the topic of privacy and how you can establish trust. So also one of the topics we will cover in more detail as part of this panel. And additionally, besides my role at the Digital Euro Association, I'm also working for Etonic, which is a small boutique consultancy company where we advise public and private sector clients on digital currencies. And I'm really thrilled to be here with you today online.
Thank you, Jonas. The next one is Arsen Nayedinov.
Hello, everyone from my side. My name is Arsen Nayedinov. Thanks for the invitation and to having me here today. I'm the product owner of the Digital Euro in the Austrian National Bank. I must say that I'm still new to the central bank life, but I'm also learning. What we do in Austria, we have a dedicated team for the Digital Euro, trying to support the initiative on Eurosystem side, but at the same time also on the legislative process. I'm a PSG member, project steering group, supporting the Digital Euro on the ECB side as well, and Austrian National Bank is part of the alliance, one of the 6 NCBs who are going to develop the internal components for the Digital Euro infrastructure. Thank you.
Thank you. And now Juraj Karpiš, please.
Thanks. Good morning. Thank you for the invitation. My name is Juraj Karpiš, and I'm director of a local economic think tank called INESS. I focus on monetary policy and financial system, and with great interest I focus on how Bitcoin started to unfreeze the evolution in banking and in financial system, and I think right now we are in the middle of this revolution, and I'm excited to talk about it.
Thank you very much. Let's dive straight into the discussion. My opening question is very simple, quite broad. Trust versus control. Let's start with the core challenge, public trust. How do we practically design a digital euro that ensures both data protection and effective oversight without becoming a tool for surveillance? This question is a good question for many of you, including Peter Paulos, Aniko Szombati, Jonas Gross, as well as the rest of the panel, Juraj Karpiš and Arsen Nayedinov. I think we should start with the representatives from European Union, Peter Paulos.
Thank you. On this, quickly from my side, because I think there are several aspects which are very important in this regards when we are speaking about trust versus control. I think firstly it's important to establish the regulation, to establish needed safeguards, and this is something which we can discuss later on how deep we should go into this. Secondly, I think it's very important, and this is also the case when it comes to the initiative on digital euro. And in parallel with our discussion on the design, we are also discussing an initiative which should improve the status of the cash, which I think is very important, and also should provide some comfort when it comes to our discussion. Thirdly, I think it's also very important to establish or to design the digital euro in a way that it's that the usability is simple, so it's understood and easy to use. What I also think, and this is one of the elements which is in the middle of our discussion, and this is privacy. And in these regards, and this will be my 4 points, it's important to establish so-called data segregation. I think this is exactly the way how we are working on it. So for the ECB as a public authority, it should not be possible to identify who is behind the digital account. And last and not least, and this is my very quick 5th point, it's about communication. I think we need to improve also, and therefore I think it's important that also FINESS organize this panel is to explain what the digital euro is about.
Thank you. We continue with Anniko. You can dive into the question as well when it comes to oversight, data protection, as well as if it's a tool for surveillance.
Okay, so when we speak about the digital euro, one of the promises is that it will be the digital cash. And when this phase is mentioned, people tend to have the vision that its privacy can be similar to cash, but this is unfortunately only a desire. And the reality is that there has to be some data collection behind the digital euro payment because we cannot allow to happen any money laundering or terrorist financing with the digital euro. So we have to communicate it very clearly that it will not be as private as cash payments, but will be similarly private as commercial bank-based payments. And to certain extent, the novelty of the digital euro is supposed to be that during offline payment, the balance can be a little bit more tilted to the cash-based privacy, but still all these concerns constantly have to be covered so that people cannot expect that the digital euro payments would be totally private. And I would like to bring up one more issue, which is not very often mentioned, but because the designers of the digital euro want it to be a popular and used means of payments, especially if they expect the banks to invest 18 billion euros for developing the scheme, so that if it is invested, and how can the usability be guaranteed? So actually the reality is that the central bank need to collect the usage data in a very detailed form so that to design it and operate it in a user-friendly way. So only if the central bank will be able to customize the product to the needs of the customer will this usability be, let's say, enabled.
Thank you. Jonas, since you're heavily involved in digital euros, you're next.
Yeah, thank you. And I think Anniko and Peter have mentioned a lot of very important points like privacy, usability, and similar. let's just go a little bit deeper on privacy and add on what Annika said, and also to get the audience a little further on board is, for the digital euro, there will be basically two different kind of tiers or two different models. One is the online digital euro and the other one is the offline digital euro, as Annika already said. For the online digital euro, I think what Peter said is very important, namely that there is data segregation. So basically that the central bank does not know which exact person is behind a specific payment. Of course, there is a number, allocated to an account, but not the real name, the address, or anything. I think that's super important to establish a public trust, because often, of course, the argument is brought that this could become a surveillance tool. But the second argument in the second tier, the offline digital euro, I think is even more exciting in this dimension, because this can indeed bring privacy that comes very close to the one of cash to the digital world. And I think, and I'm German, as a German, I'm probably a little bit biased because we like cash, we like privacy a lot. But what we don't have is today in digital payments, such a solution that comes close to cash in terms of privacy. But this is, I think, what is really needed and a gap that the digital euro can address. And to address this gap and to get the trust and the adoption, I think here again, two aspects are crucial. One is that for this offline digital euro, the privacy, this cash-like privacy is really guaranteed, like technically. So that's not just based on trust, having to trust the central bank or the tech providers that this takes place, but really basically having this a code. So it's about the technology. And this is also what currently is envisioned for the digital euro, where the offline part is now being built. So technologically guaranteed, basically, and it comes into this direction. And the second one is also the regulation that Peter mentioned, because also for this offline part, this cash-like privacy, there will be a limit. Because Annika also mentioned, it cannot be that all digital euro payments will be completely anonymous, because this would work against anti-terrorist financing, anti-money laundering, counter-terrorist financing, etc. So this means there will be a limit. And we really believe that this limit needs to be sufficiently high so that people can use their, let's say, normal daily, monthly spendings for this privacy-preserving digital euro, and that this is not so low that you can maybe just go to the bakery and buy a few goods, but more. So again, for this offline, I think this is has a really great potential, and it needs to deliver this cash-like privacy technologically, but also regulation needs to support this, that the limit for these privacy-preserving or particular privacy-preserving payments are large enough.
Thank you. Asim would like to comment as well, please.
Thank you very much for the question, because this is essential and it's super important for the digital euro. Quite often on such events and discussions, we have the same question, and we want to share that these questions that you have are also the questions that we have, and we are working on that. One thing has to be clear is that to share the private data is different to have anonymity of data, meaning that all the privacy standards in order to preserve for anti-money laundering and counter-terrorism finance would be in place, but that doesn't mean that the private data would be shared. That's no way, especially for the offline transactions where there would be in the transaction no third-party intermediation, meaning that transaction would be device to device. And I want also on trust to bring the example of 2015, I think. It's also famous as a Grexit, when for the very first time Greece starting to consider exiting the European Union. On that day, all the Greek citizens decided to go to the ATM and to withdraw all the savings from commercial banking to the central bank money. In that sense, it's still cash. So the trust is there, I think. We just need to provide the future natural evolution of the trusted money to the society. Thanks.
Thank you. Dušan Jurčák, we want to hear your opinion.
Thank you.
As a national banker of Slovakia, I think you have some insight here regarding privacy, sovereignty, and trust.
About privacy, I really do not have any insight. Well, The first half of the question, the trust. I think when we are speaking about anonymity and keeping the cash, implicitly we are speaking about the trust, because we are believing in a physical euro. The euro has won his position. In 2002, when euro started as a physical currency, a lot of Germans, a lot of France citizens, they speak that, well, there's something new. I'm happy with the good old Deutsche Mark, or I'm happy with the good old Franc franc. But now, nobody of them would change from euro. Euro has really a dollar too. It's really a internationally accepted currency, and not only we, the Europeans, are believing and trusted the euro, and perhaps the people outside the European Union, like in Turkey and or other countries, they are perhaps believing more in euro than ourselves, because they are building their reserves in euros. Anyway, and I am going next step. The digital euro is simply other form of this physical euro. It's simply other form. In the balance sheet, it will be on the same liability side in the balance sheet of the central banks, like it is today, the euro we are issuing. We will have in the balance sheets the position in digital euros, and we will earn the seigniorage on digital euro as we are earning on the physical euro. The trust is, I think, proved by more than 20 years of using the euro itself. That's perhaps I would like you think about it when somebody is speaking that perhaps the private sector can offer something like that. Never the trust will be the same, as Asen said some minutes ago. The second half of the question, the privacy, the control. I did not come here as it's sung in one song. I did not come here to fool you. I had math fees, and I was a IT expert in my youth, and I know very well that everything is once digital is no more absolutely private, of course. But I have to say that digital euro is not intended as a store of value. Is not intended as a store of value. Is a mean of payment, nothing more. You can have just now. It's not illegal to have 1 million euros at home, but it's really suspicious how you bring 1 million euros to your house, because there's a limit to withdraw 15,000 in the ATM, and everyone can calculate how often you have to go to the ATM to withdraw 15,000 to have 1 million. You will never have 1 million digital euro in your digital wallet. It's a mean of payment. What does it mean, the control? Of course, when you have even when you have physical euro, how will you receive the physical euro, the banknote or the coin? Either you receive it from the other person, that will not change, or you withdraw it from the ATM. But when you withdraw it from the ATM, it means that you have the current account with the bank. And the bank, as a payment services provider, knows about you, that you are a citizen of the EU. You are not dealing the drugs. You are receiving the salary, and nothing in this case will change. In the transaction, as it is in ATM, you withdraw the banknotes, or you transfer some funds from your current account to the account of the digital euro. Nothing will change. Of course, the PSP is obliged to have some questionnaire with you when you open the account. It's the same like today. In the project in the Digital Euro, we keep the principle that we will keep all the things as much as possible as they are today. Well, of course, it's not possible to control or to see the offline transactions. That's logic. When you are transferring some information with NFC, even the provider do not know what happened, because the offline limit is simply something like the spended money from the point of view on the account itself. It's simply spent it. It was transferred to some offline amount, and what happens next, it's no more seen or even controlled. With the online transaction, it's exactly the same like today with the instant payments. With the instant payments, in 10 seconds, you have as well the function of verifying of the payee. It's what it is. It's the control that you are not sending the money to, I don't know, to some drug cartel or the vendor of weapons or something like that. It's in 10 seconds with instant payments. What else will be a DESP, the architecture, the system for settling instantly the transactions with Digital Euro? What else will it be? What control we are speaking about? And the last sentence, I see. Really, we in central banks, we are really not caring what you are spending your money for. That's not our task. We are happy that you are using it. We are earning the seigniorage, and that's all for us. I really do not see any value of the information what you are buying for your money.
I think that summarizes really good from the central bank's point of view. Juraj Karpiš, some last comment on this, and then I have some questions from the audience.
Okay, just a couple of quick notes. The privacy in money is like, people like it because money and payment is like communication, and part of the communication, people want to have it private. That's why cash is so popular still in this country. And its popularity have risen even in Sweden, like after the COVID. Even the country with the most trust in the government used cash more after the COVID. So, in my opinion, the consumers will pick means of payments that provide some kind of privacy. And if CBDCs, Euro CBDC, wants to compete in this environment, it has to provide it somehow. And me as a consumer, I wanted to have it as well, because right now I can have trust in a central bank. I know that you don't care about my spending habits, you don't check them, but I don't know about the future governments, and if that data is collected, it may be used in the future against me. So with the rise of extremism, with uncertain future of our country, that's why I think people will calculate whether they should trust this digital euro or not. And if there is not enough of it, enough privacy for them, they will pick alternatives, and it will be not as much adapted as some institution expect. So I think privacy discussion is very important, and I think we should keep privacy in money, at least in parts of the sector, because people like it.
I have some questions from the audience here, and they're really digging straight into the private alternatives. And the first question is, the ECB board member has publicly said mid-2029 is a fair target for the launch of the digital euro if decision to issue is taken. Do you still believe it can succeed? Look at stable coins, how far they've gone, and superb use cases they already offer. Don't you honestly think the digital euro is dead? That's a very provocative question. And I don't know who would like to answer that question.
I have a mic. Maybe I can start. Like, yes, I perceive there is a revolution going on right now. Like with the stablecoin regulation in the US, the proliferation of stablecoins in the system, in the payment system, all over the world will grow, and it's I would say it's tough competition for CBDC, Euro CBDC, to compete with all these private alternatives that will spring up. I know that it's still small, it's like 300 billion. The demand deposits of JP Morgan are 2,000 billion, so it's still small, but in my opinion, like in the next couple of years, it will grow very fast and will be huge, and it will be adapted all over the world. So for me, the question is like, how, if you want to introduce digital euro in 3 or 4 years, the world will be different at that time, and I'm not sure whether the Europe will be already flooded with European stablecoins. Like there is no hurdle why Circle couldn't like make digital euros already right now and provided them all over the world. So I think that's why I mentioned Bitcoin at the beginning in my introduction. I think the world has changed, and right now we are in the middle of this revolution, and we will have to cope with it somehow. So that's my point.
Yes, awesome. Please, you can follow up.
For the sake of time, because I know that we have other question. We recently published a white paper, and we showed in a with different examples how the digital euro and the stable coins, especially the euro-nominated stable coins, can complement each other, and how that could actually support the international role of the euro, also in the international trade and so on. So I would invite all of you to check our homepage, and there is the white paper of 70 pages where we described how both products complement each other, and they are definitely not competing each other. Thanks.
Okay, now over to Dušan.
Thank you. I will shortly touch to the topic discussed in previous minutes, the question of stablecoins. Well, it's a technological development. It's popular. It's it seems very modern, very useful, and so on. But I'm an old man. I remember dot-com companies. I remember several other technological hits of the season, and where they are now. I believe that in 3 years we will be in completely different environment. Are you 100% sure that stablecoin will exist? Stablecoins are against some assets, and the assets are US T-bills. They are in US dollars. It's because it's the federal government or Fed who is issuing dollars, and the federal government is issuing T-bills, and the stable coins are stable because they are guaranteed by something which is trusted, and they are the short-term American papers, the T-bills. Well, but they are in dollars. In Eurozone, we are 27 governments, 27 states. What will be the underline about the possible stable coin in euros? What it will be?
Yes,
German
it's already done. Sorry, so the Circle already issued euro-based stable coin.
And in fact, T-bills are believed because they are short-term. What is more short-term than cash?
They can also hold treasuries with the maturity up to 90 days, so it doesn't have to be T-bills. And you can use as a reserve whatever you want. At least you have to have 100% US debt, like in form of T-bills and US treasuries.
And what is more short than cash? So cash is the king, and the digital euro is other form of cash. When you have some roughly said, in fact, digital euro is a stable coin in euros.
Just a short note. I don't want to take over your discussion. My point is like they are motivated to support their adoption because like they create yield from nothing. If you can issue stablecoins, then you buy US debt. You have some kind of yield, like not very high, like 2% or 1.5%, and then you can like subsidize the adoption. You can pay cashbacks and everything. So there is a competition. There will be, well, right now not because there is no digital euro, but there will be competition between, in my opinion, European stablecoins and digital euro.
I mean, that's very good said. I mean, the business like case is like excellent. You earn yield from nothing. Yes.
You are like central bank.
Exactly. You get sovereign. Yes, it's a good statement. But I, as a moderator, should not really get too much involved in the discussion. But so far, I don't know if any of you are here in the panel. That's the question. Have ever made a transaction, a payment with some privately issued stablecoins?
Sure, I did.
Okay, I did not. Anybody else? No.
Yes.
Not yet. Okay. Okay, thank you. So there is where I would see the advantage of a central bank-backed stablecoin, that the adoption, that people would adopt it broadly in society is more likely. That's my point of view. We have some more questions from the audience here. The first one is a follow-up on the first question. Do we need digital euro CBDCs when we already have working alternatives? Such simple things as electronic money transfer and stable coins. And the follow-up question would be why people would trust national currencies more, traditional CBDC, than public blockchain-based currencies issued by commercial banks and corporates. Why would we trust the authorities more than, let's say, JP Morgan? Let's say, in Europe, Deutsche Bank. That's the big question.
So first I would like to turn back to the point which was raised recently, that the digital euro will bring no difference compared to what we have with the instant payment. So from October this year, throughout the Eurozone, all the commercial banks has to accept request to pay and also initiate request to pay transactions, meaning that the European single sovereign instant payment regime is already operational. So the real question is what difference compared to the offline functionality, which can also be implemented on a commercial bank-based basis or on a card issuer basis, which is already taking place in the Nordics, by the way, so that what difference the digital euro will bring in 3 to 4 years, and how to sell it, let's say, to the everyday people. So what the difference will be and how to highlight it for the users on the street. This is the question.
I think we should go over to Peter Paulos here now.
Thank you.
With all these 3 questions that are up, and please develop and evaluate.
Thank you, Johan. Why we need the digital euro? I think, firstly, and it was mentioned that we have launched the euro already 25 years ago, and we have already for more than 3 decades a single market. And still there is no single mean of payment covering all 27 or at least 20 member states in the Eurozone. And there is, when it comes to private solutions, you mentioned in your question EMTs or stable coins. It looks that there is not the possibility for sufficient scaling up. So therefore, I think when it comes to the, let's say, public intervention, it's granted. So I think there is a case for the digital euro. Moreover, we are fully reliant in this geopolitically quite shaky world on the third countries solution. As you may know, and we have discussed it also in our last panel, more than 70% of transactions in Europe are made by third countries providers. And in case of 13 member states in the Eurozone, there are no alternative options, which includes also Slovakia. So you don't have any national or regional solution. We are fully reliant on a third country's provider. So I think it's a very clear case. And also in this quite concentrated market, we face the issue with prices. So it's quite costly, the solution. I think it was mentioned in our first round, the point on privacy. You may know that who is one of the, let's say, biggest seller of data to government. So I think the digital euro should be a solution which would improve not only the privacy for people, but also would reduce the cost. Secondly, I think it's very important, and I refer to it, is the geopolitics, and there is a fear, I think, and that's very relevant also from, let's say, more macro perspective of further dollarization of the financial system. It has been mentioned that the size, the current market of stablecoin is not so large, but it's increasing very quickly, and is of 99% backed by US dollar. And thirdly, and I think this should be always underlined, digital euro would be an option, so it will complement the system. And we follow behavioral changes, so there is an evolution when it's come to payments, less and less transactions in terms of number, but also in terms of value are made in cash, and digital euro should provide an option for citizens, and the added value compared to stablecoin will be a legal tender. It was mentioned by Dušan. It will be the same currency, but it will have just another form. So it will have a digital form, and I think this should be underlined, so nobody will push to use digital euro. It will be an option for citizens should they want to use the options I have already mentioned.
Thank you. A comment now from Arsene, please.
I think this question, why we need a digital euro, actually brought us to the sovereignty topic, right? And as we heard from Peter, 13 out of 20 euro area countries, they don't have a local payment system. I'm not sure how strong this message ends in the citizen there, because I'm now living in Austria, and we also don't have the local payment system. So 100% of all transactions are going through the international card schemes, which is so far fine. But we have to think about whether we want to be so dependent here in Europe, because we have our own currency, that's the euro. And also, other example is that in the countries where there are a local system, like Germany, for example, Italy, and citizens from those countries traveling to the countries abroad, like Austria, I wish a good luck to German coming to Austria, trying to pay with the local system. He would like to pay in euro, but he would not be allowed. The same for Italian. And that is why we need a digital euro. We need a pan-European solution in our region that everyone can use and everyone can pay. And it would be just in an addition of all the payment means that we have now. Another thing that I want to and more ingredients to the discussion to bring is that I'm pretty sure that even here in the hall, but also outside, in the digital years, we use services like video and audio streaming every day. car sharing, bike sharing, all of these services are accessible and available nowadays only with commercial banking money, only with digital means of payments. We, as a Euro system, are obliged, and it's in our obligation, oversight obligation, to provide the public good money to the citizens. And we are not fulfilling our task simply because we have cash. And cash is not getting to those services. We need to find a way to evolve the cash, and that is the digital euro eventually in the future, where the digital euro would be as an additional option for our daily life in the digital years. There is nothing against that. And last thing is that, because now we are having several discussions with public authorities, with small merchants, big merchants, and so on. One another thing is European strategic autonomy, because some of the non-European processors or providers are trying to apply non-competition tactics, meaning they talk to each other and they know simply that there is no alternative. And they're trying to negotiate conditions that are not in the interest of us as end consumers. Thanks.
Thank you. And now a quick comment from Dušan from the Slovak Central Bank.
Yes, I try to answer the question why we should believe more the public money than the private solutions. One word: experience. Hundreds and hundreds of years of experience. Because it's a simple task the central banks have. It's the public good. It's the legal obligation to keep the currency valid. Nothing more, nothing less. And it comes after hundreds of years of examples and situations when somebody tried to create something which will be trusted in the society. And after hundreds of years, we as the civilization, we found a solution that the specialized institutions are responsible for having the mean of payment which will be valid next year, in 2 years, and so on. It's very, when I speak about experience, 25 years ago, it was here the company BMG or Drukos, which offers as a private company much higher yields than the big banks and their times. Everybody knows how it finished. The private companies can be as big as possible, but that says nothing about changement of the ownership. 3 years ago exists Credit Suisse, where it is now. The public good is not so understand how it should be. It's some mean of payment, the legal tender, which is obligatory accepted but not obligatory used. When you have the euro in the pocket, you can be sure that the merchant accepts it. That's something which never happens absolutely with the private solution. It's only useful or not, but not obligatory. Excuse me, but I have to repeat. Perhaps I am too excited or too angry about the stable coins. It seems like that. More than 225 years ago, the French government found something like the stable coin of their times. They simply confiscated the property of the clergy, and they issued the new currency, which was backed by the property of the clergy. It was called assignats. In less than 10 years, it collapsed because it was managed by the government, not by the specialized institution. They issue more and more papers, and the property does not increase. I speak about it because it's 225 years of the Banque de France, and I was there, and in the vitrine I saw the letter written by Napoleon itself in the short period when he was making something useful, not to fight, and he was complaining to the governor of the Banque de France that, well, you were too submissive to the Ministry of Finance. I did not create the Banque de France to become as a department of the Ministry of Finance. And they know about it 225 years. That's our task. Keep the currency stable. It's a legal tender, public good. It's everybody, the merchants are obliged to accept it. You as the citizens are not obliged to accept it. It's up to you. You can use, it's up to you. You can use every investment tool you will find, but it's your own risk.
Thank you. We have lots of questions from the audience here, and I will combine two questions. Ease your imagination, imagining that issuance of corporate currencies is illegal and technically very easy. Well, it is. We will have hundreds or even thousands of private currencies. Why would CBDC be the winning one? Experience in what? In technology, in DLT. Google seems to have more experience. In payments, private banks and fintech seem to have much more experience. What can central banks actually bring to the table? Really quick answer to this question. We're getting already short of time and I have more questions coming up. Yes.
Sorry. It's not so straightforward that central banks that don't have experience. We have the BIS, Bank for International Settlement, and it's in fact some innovative hub. We even in this project we cooperate very closely with the market experts. It's not so. It can't be said so easy that we do not have experience with the new technological solutions. We are still working. We are even now working in BIS, in other project teams. What will happen in 2030 and so on.
Thank you. Now a specific question for Juraj Karpiš. What is your view on the fact that CBDCs or private stablecoins could cannibalize traditional bank deposits or even the transmission mechanism?
I think it will happen because the stablecoins will not go only after digital euro for sure. They will go after demand deposits in Eurozone banks, because if they are stable enough in the eyes of the consumers, like that, those are the guys that choose, and it can be anything. Like now the regulation that came from US, that's just like okay, they stated it has to be T-bills and US Treasuries up to 90 days maturity, but you can persuade people by having other reserves like gold or whatever. Like you can choose. They can have euros, they can have US cash in a Fedwire banks or anything. But if the stablecoins are attractive enough, some part of demand deposits will leave and we'll use them as a digital euros. Because right now, my euros that are digital, like I mean that in commercial banks, are also created by private institutions. So the stablecoins will compete with these private institutions, and they are not like as stable as we imagine. Like maybe you remember, but we had bank crisis 2 years ago in 2023 in the US that had to be stopped by Fed. We had a bank crisis in Eurozone, like the last time the banks were closed in Greece was like 2015. We had the closure of Cyprus in 2013. So there are some arguments to be made for these new private issuers of stablecoins, and they will have to persuade people. And I think there will be competition, also not between like digital euro but also between stablecoins and classical banks, because if they are quick, if they are stable as promised, and if they may even pay some cashback, because like as I already mentioned, the business of central banks is very profitable. So if you are in the business of central banks, you have seniorage, you can part of it and pay it back to consumers, to whoever uses your stablecoins, then it's quite attractive for me. So I'm afraid that the ECB or the central banks will be like much more pushy. I'm not sure about if it will be voluntary, which currency, if I can choose between stablecoin, euro stablecoin, or digital or not. So because it will be difficult, this competition.
Thank you. We have to move on, and now we have a question that I will direct to Jonas. Technical and practical questions. We're going to talk about the tech opportunities. So let's move on beyond the hype. How can features like programmable payments or AI actually improve transparency and create new services rather than just adding complexity?
Yeah, thanks so much for the questions, and I will also be pretty quick looking at the time. So I think what's the challenge is that the digital euro, even if it may come just around 2029, 2030, if it comes at all, is prepared for all the innovation that is currently going on, right? And this includes AI, programmable payments, etc. What the Eurosystem has made very clear is basically that such innovations, they will typically not happen in the main layer like programmable payments. They are not happening on the main settlement layer that is managed by the central bank. But there are opportunities for banks, for other service providers, for fintechs to offer such services on top. And this is, I think, exactly where a private-public partnership is needed, where it shouldn't be the expectation that the central bank is doing all of that, but that the innovative private sector steps in, and basically a good model is found to have such a collaboration that in the end you can leverage all these innovations. Because of course the market is not standing still while the digital euro may come in a few years.
Peter Palusz.
Thank you very much. Quickly on this, because I would like to avoid that there is a confusion, especially because you refer to the possibility to have something like programmable digital euro, which I think won't be the case. We should be very clear that the digital euro will not be programmable. In my understanding, there will be, and there is also, that's the intention of the regulators and the policymaker, to make it 100%, that it will be 100% fungible. It means there will be no limited duration, no limited usages. And this is very important to, I think, also to communicate. There is something different when we are speaking about the possibility to have conditional payments. And that's also the intention, to allow, to make it possible, to make possible conditional payments, which are known in private business as a so-called smart contract. This is something which is foreseen also for the digital euro. And this I will link also to your previous question when it comes to the, let's say, competition within the private-public sector. Because when we are speaking about digital euro, it will be a two-tier system. So there will be the ECB, and the ECB will establish the infrastructure. And this ECB has a very good track records with infrastructure. And there will be a second layer. So there will be intermediaries, banks, e-money, and etc. And this will be done by the private company. So it should encourage further, let's say, innovation and etc. And this is something what we foreseen as a possibility to establish a so-called or value-added services. And there will be what is expected is to establish a competition in these regards. And this could be used in different, let's say, different ways. I mentioned already the possibility for conditional payment or so-called smart contracts, but there will be also the possibility to have different approaches when it comes to so-called waterfalls. So there will be possibility for fintech companies, and this is something where I think we should a little bit more focus on, especially when we are discussing it with with the private sector. And in this regards, what the digital euro could bring to the whole system, because again, I have heard some doubts in this regards. The digital euro, should we be successful, and I think we will be, will improve the digital payment acceptance, and I think it's very important also for the private providers, and it's also will improve the so-called financial inclusion, which is also very important when it's come to acceptance of digital payments in general.
Thank you. A quick follow-up from Arsen, and then we will have to start to round this off.
I think, Peter, Jonas very correctly mentioned that, and that's why I want also to say there is a huge difference between programmable money and programmable payment. The digital euro would not be programmable money. Nobody would have the right to tell you on what and until when you would be allowed to spend that euro, but probably digital euro would support programmable payments, the so-called conditional payments, and evidence for that is the euro system experimentation work that started this week. There were 2 scopes, pioneers and visionaries. Roughly 90 applications have been submitted to Eurosystem. Third-party providers, fintech startups were there to test with us. As I said, the pioneers were working only on the conditional payments. The visionary, as it says by the name, were fintechs that were presenting their vision and how they can imagine the digital euro support their product. The finalists have been invited to a half-day workshop in ECB. We are very happy that there are some Austrian companies. Just give you 3 examples of innovations. One is the e-receipt. Eventually in the future, with all the digital euro transactions, it's a potential that there would be a e-receipt attached to the transaction, meaning that in the future, if I buy a TV and in 2 months I need to go for a warranty case, I should not call my wife and say, where is the receipt? It would be always there attached. The second use case is pay by usage. Very practical for train delays that the users and citizens are charged only for the service that they have used. Apparently in Vienna, we pay for delivery, but the delivery mans, they're delivering our boxes to the corner shop because it's convenient for them. But potentially it would be pay by usage, meaning once the delivery is there, and so on and so forth. Many other use cases. And that is why we believe that the digital euro, there is a potential, and it would foster innovation. It would foster competition in the payment, and it's, I think, already there. The digital euro definitely mixed the players and made, or kind of made more movable the payment landscape in a couple of months, if not years. And the last thing, that would be also an opportunity for European players to ace their scalability and to access more markets from day one based on the infrastructure. But third-party providers, the market is the one that should add or build on the added value services.
Thank you. We have to round off the discussion now. And the last question, I think, at least is partially covered. It's a question regarding programmability. So, as you say, I completely agree, by the way. Programmability will not be with the digital euro, not with the currency itself, but with the payment systems, where different payment systems can have different forms of programmability. And the question is basically, I don't think we have time to answer it, regarding the scare or risk of social scoring, limiting transaction, limits on purchase and specific items. If somebody can give that 30 seconds and focus on the payment systems and the risk of having these limitations built into the payment system, even though it's not built into the currency, or will the approved payment system for the digital euros vet these kind of initiatives? And that question must go to a central banker, and it's 30 seconds.
try to say it in 30 seconds. It really is not our task. We are issuing money. We are issuing euros, not caring about how the people are using it. It's the task of the governments. Even in the field of programmable transactions, you never saw any central banker speaking about it. It is always some politicians, some citizens, some activists who do not like that the people who receive the public money for living spend them for alcohol and so on, but it's never the compliance from the point of view of central bankers. It's not our task.
Thank you. We'll have to round off the discussion now, and I think we covered the questions from the audience. And I would like to thank the panelists, Dušan Jurčák from the Slovak Central Bank, Aniko Sombati, digital expert and ex-digital leader at the National Bank of Hungary, Asen Naideno from Austria, product owner at Digital Euro Austria at the Austrian National Bank, Jonas Gross, Chief Operating Officer at Ethernet and co-founder and chairman of Digital Euro Association, Peter Paulus, the head of the financial unit at the permanent representation of Slovakia in the European Union, and Juraj Karpiš from INESS. Thank you very much for your contribution. And I think the future for the digital euro, a summary, the central banks, they will introduce it. That I think will happen. Time will tell if I'm right or wrong. There will be competition from private initiatives, unless the politicians put a wet blanket over that and try to ban it. Well, it's not impossible. Unlikely, but it's not impossible. There will be competition. And as an economist, not as the moderator, competition is good. It will lead to good solutions that will work for a large portion of the consumers. And I will round off with one word. The digital euro is a great tool for unbanked people in the European Union, and also for payment across borders, even outside the European Union, with unbanked people. So, therefore, I would like to thank the panel. Thank you very much. Thank you. Thank you.